Markets now talking about a bubble machine, and a serial one at that, that's destroyed honest price discovery at our markets. That is how our next guest describes the Federal Reserve.
David Stockman is a former Reagan White House budget director. How's it all going to end? Crisis. And how soon?
Well, I don't think it's going to end well. The Fed has painted itself into a corner. It's violated every rule of sound money that ever existed. All interest rates are manipulated. The yield curve is artificial. It's created by the $85 billion of buying every month by the Fed. The stock market essentially does not discount future earnings. It simply trades the juice and the word clouds and the latest hint or maneuver coming out of the 12 members of the Politburo who are basically running this country. You cannot run a financial system with trillions of dollars worth of trading value and capitalized value on the basis of 12 people, in fact, one person, the chairman, emitting word clouds like he did yesterday afternoon, 20 minutes before the close, to create a Hilson rally by telling a preferred reporter from the Wall Street Journal, well, you're misunderstanding me. This is so different from what any central banker ever thought 20 years ago. Do you think Volcker would have done this?
Well, the Federal Reserve, this Federal Reserve has only truly been independent since 1951, with the Treasury Fed Accord, because the Treasury Department told the Fed during the World War II, starting in 1942, said you have to fix interest rates. We need to keep interest rates low. So this has gone on before in a different way, hasn't it?
Yeah, and I addressed that in my book, by the way, and that was a contingency during the war in which there was nothing to buy. People saved most of their income. They put it into government bonds. The government decided to fix the interest rates and then maintain it after the war when it shouldn't. But the point is, William McChesney Martin became the Fed chairman after the 51 Accord. He wouldn't have dreamed of the kind of monkey business. This is Mickey Mouse stuff, but coming from the chairman of the Fed.
In more modern times, the defenders of the Federal Reserve will say since the crisis in 2008, if the Fed had not been as aggressive as it was, things would have been a lot worse.
No, the Fed created the crisis. We had the housing bubble. No, first of all, we had the dot-com bubble. That was clearly fueled by
rates too low for too long
in the 1990s. And then after the dot-com bubble was a warning sign for the Fed to back off, let interest rates be set by the market, not manipulated.
What about post-08?
Well, but the point is, you then inflated a housing bubble, you inflated a credit bubble, you had a great party in America, it all crashed.
Would you be happy if we got rid of it? Got rid of the central bank.
I think we ought to go back to the original mission that was assigned by Carter Glass in 1913 when they passed the law. The Fed was a banker's bank. It was a discount window. It never intervened in the open market. It couldn't buy government bonds. It simply discounted good collateral that was brought by the banking system.
We violated that not once but twice. So. And we didn't go to hell after, we didn't go to hell when the Fed was doing the very same thing in the 40s.
The very same thing in the 40s was a different world. It was a world of war. It wasn't a functioning economy like we have today, and it wasn't sustainable even then, and that's why it ended in 1951, if you look at the history. But since then, and in the world economy we live in today, where there's vast capital flows by the nanosecond, the idea that a Fed is going to be setting the price of everything in financial markets is dangerous. It's reckless, and it's leading to the greatest bubble yet. We have it in the bond market.
A worse.
And the problem is when the market loses confidence for whatever reason, a black swan, or the dot-com bust in April 2000, or the Lehman event, which wasn't expected, they lose control of this bubble. There will be massive panic selling, and everything will go down.
That essentially answers the question about 2008 to 2013. Which,
by the way, Carter Glass from Lynchburg, Virginia.
There you go.
Right from where
David, it's always great to have your point of view, and thanks for coming on once again. David Stockman. Okay.
Stocks now.